this is what this event is all about, exchanging ideas and developing the capital markets. It's my pleasure to invite those who are here already. Vera Sutedja, Head of Equity Capital Markets for Erste Group Bank. And Vera will talk about the latest trends and drivers of the IPO market. The floor is yours.
Is it on?
It's on.
Okay. So, good morning, everyone. I see everybody is coming, so a bit rushing towards my first presentation. Welcome, everyone. My name is Vera Sutedja. I'm from Erste Group. I'm head of ECM, and I'm going to present you a deeper picture about the equity capital markets in the region and also in Baltics. So, going into my first slide, we're going to look at the development of the current IPO market so far. What we have seen is that we had a nice peak in 2021. That's where the interest rate is basically zero towards negative. And then since then, we have not recovered. What we have seen also is that even in 2025, we are still do not cover even the level of 2017, and we are actually at the low level of 2009. This is globally. What you can also see in the second chart, which is the European IPO volume, is not much different. The trend is very similar. America is also the same, it's just a much bigger number. America's size is 51 billion for 2025 year to date. Asia Pacific is 57 billion, so they're bigger. And Europe is 16 billion. So this is where we are at the moment. And if we going to the deep dive in the transaction of equity capital market in Europe, what you can see is that this is including not only the IPOs, but also additional follow-ons, meaning capital increase or exits, share sales, and so on. It's a very nice picture. What you see here is that, again, okay, 21 is the peak, but most transactions are actually follow-on. This is exits, capital increases. These are where actually my department mostly working on rather than on IPOs. The IPO itself is very limited. So we have in the second quarter 2021 as much as 27 billion IPOs worth in Europe. And to compare in second quarter this year, the number is 1.6. So these are actually something that is called the drought, the IPO drought. So we are yet to pick up from this very low level on IPO. At the moment, we survive from the follow-ons. There's some convertibles, but there's not much there. Now, to look at the IPOs, we always look at the bellwether, which is the US market. In the US market, what you can see is that these are, I only include the IPOs over 100 million, so I do not include the smaller size. We have this year 42 deals on corporates, 92 deals on FI, financial institutions like SPAC, Special Purpose Acquisition Fixed Cycle. And the volume in total is 45 billion, 45.5 billion. You see, when you look at, if you can see the slide deeper, most of the IPOs are actually, if it is not financial institution, it is for technology. So the techs are definitely the driver of the IPO market in the US. How about Europe? If you see Europe, okay, our volume is much smaller. We are not 45, we are 13 this year. And, but it is a lot more diverse. So a bellwether for the transaction here, after this you will hear from Nasdaq Stockholm, is the Fredriksson. So this is the IPO in Sweden. The deal size is large, 3.6 billion euro. And this is approximately 3.6 billion out of 13. So it's close to 30% of the IPO deal size of this year was from this one company. And another thing that I have to mention here, if you look at the countries, the Sweden is leading here, over 6 billion deal size. So almost half of the whole IPO deal size is actually for Sweden. What is actually we can see from these previous slides is that what's quite common is to stay private for longer. And this is a very common issue, so it's not from the dam of the banks, so we are financing as before, but we see a lot more companies being private because it's funded directly by the private equity or private debt providers. And therefore they stay longer private and they get bigger being a private company before they go into the stock market. Now, how about let's look a bit deeper into the region where we are now, which is the Baltic and the Nordics. On the orange side, you see all the Nordic IPOs. That is, I lowered the range a bit, so this is above 50 million. And you see this year alone, there are 10 deals, volume in total over 6.7 billion euros. And Fredriksson again is one of the biggest with 3.6 billion. It's a very nice volume on the Nordics, so well done. Now on the Baltics, I move the IPO timelines to the last 10 years in order to gather this data. We have 8 deals in the last 10 years. The total volume of the combined is less than 1 billion. And the most active was in 2021 and 20, it was Eņģelis and Enefit Green. And as we all know, Enefit Green is already delisted this year. The last IPO is in any case with Elefing. So it's we do have, this was just very recently. And another thing that to look at this, so a lot of numbers, is the scale of the deal. So of course it's a Baltic market. It's the deal tend to be smaller because it's also dependent on the size of the company. Now, when I was asked to do this this speech, I was asked for all the potential IPOs that we have. We gathered this information for the CEE, Baltics, and Nordics, and you see there are companies in the pipeline. What's important to see is that this is a mix of industries, so not heavy on tech, not heavy on FI. So we see now some defense. Actually, it becomes a very, very prominent topic at the moment. Valuation is also running very high in addition to tech. And the other thing is we see the usual contender. You see the biggest line on the right side is actually Poland. So Poland is very, very active in the capital market. But we also see definitely the same in Sweden. So this is also another country that is very far advanced in terms of potential IPOs. Will all of these go in a real time into IPO? I have to say the truth is only a fraction of this normally made it to the IPO market, to the stock market. Why is that? Well, IPO is about also being readiness for being listed. So are you in the right industry? Are you in the right size? I mean, profitability, sales. Are you in the right valuation? The sellers also need to make their return. Yeah. And it's when the sellers purchase an asset back in the low interest rate, so with heavy leverage, and now we are at a much higher interest rate. The WACC is different. The DCF, discounted valuation, looks different. And some people just definitely feeling very, very hard. Why do I need to make an impairment out of my return? So the right valuation is, until now, is a very, very sensitive topic when moving into IPO. And the heaviest discussion is normally the pricing discovery. what does the market willing to pay. Some of you here are investors, and you know yourself what you are willing to pay based on the available listed companies, and why do you have to pay more for a brand new company going into the market. So the valuation is a contested, heavily contested topic. And then finally, the right timing. The right timing means, like, you know, when you are very ready to go to IPO and suddenly the war starts in Ukraine. So this volatility of the market will increase significantly. Then sometimes we cannot launch during that period. So a lot of this basically giving into the driving factors why a lot of the IPO pipeline actually do not make it into the final round. Now, we have seen in the previous discussion about what drives the equity capital market. Frankly, we need the investors. We have the companies. We have very good European companies who needs to scale their business up, and it cannot be mostly done by funding from the banks. And what we have seen is that here is, we have only 3 slides on this, but what you will see here is how much we invest in shares. I have here in Latvia, Lithuania, and Estonia, the EU average is there. In any case, it's not very much. Yeah. The US pretty much have more than half of the US population that actually invest in stocks. So we have a long way to go from here. And in the previous discussion, we see a lot of financial literacy was being discussed. So I will spend a bit more time on this slide because, you know, you have a lot of qualitative, but as equity capital market department, I'm driven by the numbers, meaning like you have to see what is actually in the numbers. This is the fact. You see that Sweden, where Sweden is, which is a very high financial knowledge, literacy, Denmark and Netherlands. And as a result, in this also their cash share that they own in the household is low. They tend to invest more in other investment products. We will see later in the final slide. Unfortunately, I do not have Estonia, so I only have the Latvia and Lithuania in this picture. But you see where the EU average is. The EU average is pretty much rather low in the first place. I wouldn't say it's very high. And then ideally, most of the countries actually will have less in the bottom. So we have more countries in the bottom, which means you have less cash holdings. But we are not there. We actually hold most of our assets as Europeans in the cash. With the inflation and so on, you know, the cash work less. The present value topic here is very, very prominent here. So this is unfortunately where we are. Yeah, so that's why financial literacy is very important. Put into numbers, here we are. The more literate we become, the more we will invest in other things than cash. Final slides. In these final slides, you see, okay, they are very small, so apologize for that. And what we have seen is that the less the green color, the better, which is the cash. And the more in the investment funds, which is dark green, the turquoise green or turquoise blue, the listed shares, life insurance, and pensions, the better. And what we have seen, again, I have to quote Sweden, they have the lowest one. Poland is the highest still, yeah. And in general, we are all approximately around 50 to 60% in Latvia and in Lithuania. this is where we are now. And the Baltic capital market, the Nordic capital market, or in general the whole capital market, is driven by taking this cash and putting into investment. We need to invest because I want to go in pension with decent amount of pension income, and it will not work if we only put it in the cash account. So with that, actually, that was my presentation. Thank you.
Thank you, Vera. Before we go on with the panel, you can take a seat. I'd like to ask my Nasdaq colleague, Adam Kostyal. As you saw, Sweden is really the star of European IPOs. Adam is the head of Nasdaq European listings and also president of Nasdaq Stockholm Exchange. Go ahead, Adam, the floor is yours.
Thank you very much. It's a pleasure to be here, and in particular pleasure because actually my heritage starts from here, because my grandmother's family, she was born here, she lived here, my mother's born here, my uncle is born here. So it's great to be back, and Riga is important for me and my family, but also from a business point of view, because at the end of the day it's been inspiring to listen to the conversation today about the affinity or the potential affinity between the Baltic and the Nordics, because at the end of the day we see a huge potential now with the whole discussion around savings investment union, but also increasingly the importance to align on defense, energy, but of course also capital markets. And often I hear that there's a gravitation towards London or Amsterdam from this region, or Frankfurt, while in reality I think the affinity is even much closer and much stronger with Stockholm to start with, and potentially also Helsinki. So why not see what the opportunity is to really bring this region much closer together? And I was inspired by the ministers who discussed this earlier today. So we are, of course, just a quick background. As many of you know, we are an operator and owner of exchanges across many markets, but the Nordic Baltic market is a very important one for us. We have more than 800 employees in the region. Our Vilnius is one of our largest offices on a global basis and one of our fastest growing offices, where we have many of our talented support and many of our key business operation is driven from there. So again, not only an important region for us from a capital market perspective, but also from a day-to-day operations, our Nasdaq global business depends on the Baltic region. So the IPO market, we had a great introduction previously. Yes, it's been a bit more quiet on a global basis. But the reality is that the Swedish market has continuously outperformed. And when we talk about IPO windows, yes, the IPO window has been closed for quite a long time, but in reality it has actually been open much more frequently and much more actively in the Swedish market. And again, it's important that I do not stand here as the question as a shining star, but I'm more a reflection of the economy of the Swedish market. But in reality, we also have a lot of room for improvement. But it is important to understand that this region has a great overlap with the Baltic region in terms of the banks, investment, culture, understanding. So from that perspective, I see a great affinity. But at the end of the day, what really has allowed our markets to outperform over time is the fact that so much of our GDP is represented in the public markets and not outside the public markets. And I think that's a fundamental shift that we need to see in Europe, and that's very much why we're so engaged around the Savings Investment Union. And if you look at the IPO activity, we often talk about big capital market centers like Amsterdam, Frankfurt, London, but in reality, the Swedish market and the Stockholm market has continued to outperform, and this year in particular, where 60% of the IPO activity has taken place there. And yes, there's a gravitation to talk about why did Verisure choose Stockholm and why did they choose to list in euro. And why were they so successful in their IPO? That's absolutely important because, as we were discussing before, many of the companies have grown to become significantly larger in private hands and now need to transition into the public markets. But equally important is the fact that we continue to support SMEs in the public market. And I think it's super important that the capital markets do not only become a resting place for larger companies, but also equally a vibrant environment for smaller mid-sized companies where so much of the innovation and growth takes place. And that's why it's important for governments, financial institutions, pension funds, retail, to really understand how can they engage, how do we engage the whole ecosystem, not only to allocate larger sums of money, but also smaller portions of money to smaller companies which are driving innovation and growth. And that has been the key driver for us, the continuous flow of smaller mid-sized companies that have transitioned into the public environment. One important statistic which I haven't raised here is that roughly 30% of private equity companies in the Nordics transition into the public environment. In Europe, that number is roughly 7%. This transition from private to public is a key issue that Europe needs to address, because that is where the value is created. That is where the democratization and the ability to really engage all flows of capital to participate in that continued growth really takes place. And that is why I believe the Swedish market and the Nordic markets have continued to outperform, because they have cracked the code on how to manage that transition, and that's what Europe needs to focus on as well. So that is also then reflected in terms of not only Verisure, but actually a significant number of the IPOs, the most active IPOs in Europe, have actually taken place here. Because yes, it is a very uncertain time, it's a much more selective market, but we have a much more engaged environment supporting companies transition into the public environment, and that has now been translated in this activity that we see. And again, these are IPO numbers, and I think it's a very important number that was brought up before, that it's not only about primary capital, it's also about the secondary activity, the ability for all the listed companies that we've had to continuously raise capital on an ongoing basis in difficult times. So if we look at what really has driven the Swedish innovation and the momentum that we have seen in Sweden, of course we have a vibrant economy which has been discussed today about really that starts from the ground, making sure that households are exposed to the public markets. That is the key. That is absolutely the key, because that will then build the foundation for smaller mid-sized institutions, larger institutions, international institutions to participate in the market. But also we have a very vibrant ecosystem. And this is what you have in the Baltics as well. You have a very vibrant ecosystem that's being built up. Estonia, many of the Baltic markets are being raised as key drivers of innovative companies. The question is, how do you crack the code to make sure they also have the opportunity to transition into the public markets, which, as we have managed to do relatively successfully in Sweden, of course we need to do it better. And as I mentioned before, the retail is really the foundation. So many markets are built top-down, with larger institutions that make significant allocations, but do not engage with SMEs. And this is what we need to change on a European level. We need to make sure there is a fundamental depth of capital. What makes the Swedish market so strong in terms of supporting IPOs is not that we have significantly large investors. It's the fact that we have a depth of the full range of smaller institutional active investors that participate in smaller IPOs, which are raising smaller amounts of capital, but are significant for their continued growth. This is what makes the market different. If you look at Amsterdam, Frankfurt, London, the top layer is pretty much the same. The top layer is very mobile. The top layer will invest in any market. They like the Swedish market, but what makes the fundament of the Swedish market is the fact that you have this depth. So you have the ability to, with long equity only, support a company in the IPO market. This is the fundamental difference between Amsterdam and Stockholm. In Amsterdam, you have a thin layer of international investors. In Sweden, you have a deep layer of long-term equity of different size. And this is critical, and that's why Verisure was so surprised when they engaged with the Swedish market and finally understood this. This became a differentiator. In addition to that, they were able to engage 60,000 retail. This is the additional topping. So again, local markets is a key aspect for us. There's a talk about creating one exchange in Europe. That's not the solution. We think more regionally. We think more from our perspective that Nordic Baltic is an interesting model. We talk about in Brussels that the Baltic model, or what the Baltics has done to create a more homogeneous infrastructure, homogeneous regulation, a more regional approach should be inspirational for Europe. And we are also inspired by this and see more affinity from a regional Nordic-Baltic perspective and see the opportunity to build something much stronger here. And we would love to see that companies understand the value of this Nordic affinity. Because at the end of the day, we also heard about dual listing, that there's some skepticism around dual listing. But in reality, a dual listing is not necessarily about a fragmentation of trade. It's really about investor reach. If you're not listed in one market, you will not be able to talk to certain investors. The dual listing really creates that ability to engage with investors. If a company here is grown here as the national hero and does not list locally, a lot of the local pension money, a lot of the retail money will not be able to invest in that opportunity. That's a missed opportunity. There's a lot of loyalty, there's a lot of long-term opportunity in that. But the diversity of a dual listing is complementary, it's not fragmentational. So from that perspective, I look forward to the panel and discussing this further. At the end of the day, we also talked about how the capital markets can serve in its role of supporting growth and the need to finance green transition, growth, innovation, AI, etc., but equally defense. That's why we're so proud that the first defense bond and resilience bonds that we launched, the framework we launched, was actually used for the first time in Lithuania. So from our perspective, we see this as a great way to use this defense bond as a mechanism. Just as sustainable bonds became almost 40% of all the debt raising in Stockholm, we see that the defense bond and the resilience bond and the infrastructure bond to support the transition that we need to do in defense as a critical piece of the financing component that where the capital markets can play a role. Thank you very much.
You can stay,
Yes.
stay on the stage. For the panel that you might have guessed will start to talk about IPOs in our market, I asked the moderator, Rūdolfs Eņģelis, law firm Sorainen partner, on the stage, and please invite your distinguished panelists. The floor is yours.
Thank you, Kaarel. So on our panel, we'll have Vera from Sutedja from Erste Bank, who already delivered the first keynote of this panel. Welcome. We also have Ms. Maire Gustavson, who is head of investment banking at LHV Bank in Estonia. Welcome. And we should have a fourth panelist who is currently braving and overcoming the logistical challenges of regional aviation. But I've been told that she's on the way here. Egle, you are here. Wonderful. Please, Egle Fredriksson, portfolio manager at East Capital. Wonderful. So the panel is complete, and I shall sit on this side. And I think the two presentations that we just heard really set us up for a great discussion and gave us some very nice talking points. I also invite the members of the audience, please send in your questions, and at the end of the panel we will do our best to devote some time to ask some of them to our distinguished panelists. Maybe coming back to the global picture, Vera, coming back to the data points that you mentioned. So there's a peak in 2021, then there's a pretty flat drought. I also noticed that if you extend the timeline way back, it's already on the decline. It's already on the decline. So do you think there's a global trend that in general IPOs are on the decline for whatever reasons, maybe for broader availability of other capital channels?
So, as I have said before, we have now the rising private market, the private debt, the private equity. The companies get financed by these type of investors, and they get bigger, and that means also they stay private longer. So it kind of normally, if let's say stays the same, we probably already should start a lot more traction in the IPO market. But what we have seen is that one chip in, so that's prolong our timing. The second one is the valuation acceptance, meaning like a lot of the transaction that is meant for IPO did go instead to M&A. So that's what we see is because of that. Yeah? So there is only a bit, how you said, we call it a break.
Adam, you want to add?
I think it's an interesting reflection. I think it's good that we have a stronger private market. It's definitely gone much more sophisticated. In the Nordics, we also have a very exceptionally strong private equity. I think one of the things that we've cracked in the Nordic markets to a certain extent, but needs to be better, is the fact that we have, I mentioned it, 30% of private equity has transitioned into the public markets, whilst in Europe it's roughly 6 to 7%. Now, one statistic which is interesting is that 70 to 80% of our IPOs in the Swedish market are below 1 billion euros in market cap. In Europe today, it's difficult to list a company if it's not 1 billion euros above, for two reasons. One is that institutional money does not get out of bed unless they can allocate a certain portion of money. And advisors obviously then do not gravitate to work around these IPOs because they cannot find the capital to support these IPOs. That's what we need to change. We need to change this dynamic where pension money and institutional money engages around smaller IPOs as well. Then we will see a shift. That's been the driver of the growth in the Swedish market, which has been contrarian to the rest of the sort of European landscape, where the trend has been that the number of companies has gone down. And so I agree with it. But then the last comment I would say is that, SIU is very much about lowering regulation or making the world less complex. I think one of the key focus areas is how do you make that transition from private to public more seamless? A lot of the regulation has gone into the public environment because it's transparent, it's visible, it's tangible, and less of the regulation has been focused on the private world. That needs to be more balanced. And I think from that perspective, if you create that balance, there will also be a more seamless transition into the public landscape. So it's a combination of many different things. But at the end of the day, I'm optimistic, and I think we're on a positive trajectory, not a negative trajectory, in terms of the IPO activity going forward for next year and the year after.
Well, I think your presentation convinced everyone here that there's plenty of things that we need to learn from the Swedish success story, and how is it possible actually to replicate it here in the...
Well, we need to learn from the Baltic story as well, because I think at the end of the day, we use it as a great example to show that, listening to the ministers here before talking about the need to maybe create a more homogeneous market across the region. We have created one CSD that operates for 3 markets. We use this as a great example to show how you can create more strength, more regional thinking, because no investor invests in one specific market. It looks at the region as a whole, and we need to learn from that from a Nordic perspective as well. So we have a lot to learn from this region, but so this cross-fertilization is very important.
This probably resonates very well with Egle, what your organization, East Capital, is doing. I mean, you invest across the whole Central and Eastern European region.
Not only, but I will speak from Central Eastern European investor perspective. And
so maybe my question to you is, how has East Capital seen this year in terms of investment opportunities? So we saw from the previous presentations no new IPOs in the Baltics, one delisting though, which we'll touch upon a bit later. What's the picture in the region?
yeah, I definitely would agree with Adam that we are more on a positive trend than negative. And it's a bit of a delay maybe in Central Eastern Europe with the comeback of IPOs, the closer to the epicenter of geopolitical risks, the more delay there is. But it was a good year already. I mean, we see close to maybe 20 larger IPOs in the region, and the largest was in Poland, so very successful. The second largest was in Croatia, actually, so even the smaller countries are coming back. And I think we see quite interesting pipeline. I mean, there are very many themes that actually now very hot in the region, including defense, including infrastructure. So I think we are up for another interesting year ahead of us. And I think this is what the region really needs, more depth and more liquidity. And I only hope that Baltics is just next in this train of increased investor activity. There's a lot of things that still need to be in place, but yeah, I'm interested to hear more from the local perspective. What do you think?
We will actually go into the local perspective almost immediately, but before that, one follow-up question on the point that we discussed a bit earlier. Now, your fund, I didn't ask this to you before the conference, but I assume you invest in both listed and unlisted entities?
Only listed.
Only listed, okay. So, nevertheless, my question is, what's your perspective on this private for longer theme, or maybe, private forever theme?
Yeah. I mean, capital markets is not really a competitive for private, or the listed public markets are not competitor. It's a very complementary. And what I've personally seen now in Central Eastern Europe, that many companies that were there private for longer in the hands of private equity, eventually they have to list at some point. All these funds are not forever funds. So, I mean, we've seen quite few very interesting transactions that happened in the last year, and I hope more to come. I mean, of course, they reach a certain size, and then it's only the capital markets. Maybe it's a question of time.
Okay. Maire, you operate here in the Baltics, so you have a very good feel of what's happening. So this drought that we saw in the numbers, what does it represent? I mean, maybe it represents the fact that there are no companies which are currently experiencing a hunger for the capital that the public markets could offer.
I think it's most of all the uncertainty, whether the Baltic capital markets work, whether if you do the IPO you will really succeed. There have been a few examples also in times where there was none IPOs in Finland, and we did this Infortar IPO. It was 30 million-ish. So good companies can make it at any times, but the overall feeling is that it's not the time for IPOs yet. But I think now it's really getting there, that the bravest of them all will come to the market hopefully next year and open the IPO kind of era again. So I'm quite positive that there will be IPOs coming. Okay, so you know of potentially real cases coming to the market next year? Yes, I think there are a few. It's obviously, you know, will it happen or not? What's the market sentiment out there? But companies are preparing really seriously. They will not be the size that Egle would prefer, maybe. But in my opinion, it's also important to have these mid-sized for Baltics, meaning also like 10 million IPOs present, because we need to do the homework also internally, that we have institutions, we have retail that invests in equities again.
Okay. Since we're talking about the drought, maybe it's worth to briefly reflect on the delisting of NFET Green that happened this year. I mean, there's been plenty of commentary in the industry already about these things happen, and there's probably good reasons, good business reasons behind that decision. But maybe your reflections.
Yeah. It obviously was a sad moment at first when I learned about it, because our team also worked with it throughout ages to get the listing done. But in the end, you understand that every company has a life cycle, and sometimes it's best to be public, and sometimes for the greater good, it's better to delist. So it's the right time for everything. It obviously, for the capital markets, for all the international institutions looking at Baltic capital markets, I think from volume-wise, it was around 20% of volume from the whole Tallinn main list, and around 12% from all Baltic main list. So it was a big impact. We need something as good to be replaced. But yeah, every case is unique, so it really matters. Exactly like the thing that I said about making an IPO when there's not really the market for IPOs, that if you're a good company, you can manage it. And the same is for the listing, that if you need it, then you need it.
Maybe, Vera, coming back to you and a bit more of the global picture. The US market is now behaving in very interesting ways. Many people are observing how the capital markets have really divorced from the real economy. So it's a bit uncertain. I mean, it's a toss of a coin, basically. What will happen to the US capital markets next year? Will they continue reaching new all-time highs, or will there be a correction of a degree? Now, whatever happens there, to what extent it will impact what happens in the European capital markets?
Well, the US market is now basically starting to move sideways rather than going into the positive trend. Yeah. So, and as we have seen that NVIDIA's results even is actually beat the expectation by 2 billion. Okay, we're talking 57, so by 2 billion is 55. But in any case, it's a 2 billion over expectation is huge, but then the share price is not really doing very well. We reach at the level where actually a lot of people are warning that this is a bubble. Whether this is a bubble or not, I cannot really say. But if I have to put the money in my mouth, I'm not buying at the moment. Yeah. So there's in reality, the volatility at the market is now high. We are above 20 again. It's not a so it's market is very nervous. So I think in the US, if the stock markets there is a correction, we will feel the impact normally. They are the bellwether. On the other side, in Europe, we have heard about the peace progressing. Okay, we have a lot of faith, hopes in the past. I don't know whether this will be again. But what we have seen is, for example, the rally in the defense was one thing. The second is the stocks related to rebuild Ukraine is also starting in the last 5 trading days to move up significantly. So these are the specific European. Then you still have the German 500 billion investment that is yet to move into materialization or realization of that. And there was a rally and it's already down again, actually. So this is also the next catalyst for Europe. So there is a connection to the US, but Europe has its own dynamics.
Okay, very
Can I maybe jump in there? Because It's interesting, this definition of bubble. I mean, AI is here to stay, you know, and I think AI has been the driver of this valuation gap that we see between Europe and US. We talked a bit before about this gravitation to Magnificent Seven, to size. I think at the end of the day, the US markets will always be important for Europe, whether commercially or from an investor point of view. I see in the IPOs that we've done in Sweden, many of them have been anchored or cornered by US investors. They are looking for European opportunities to invest here. There's this perception from Europe that listing in the US will be the solution for everything. In reality, when you look more granularly, the liquidity of some of our larger companies across Europe is actually on par, if not better, with some of the companies listed in the US. And if you look at it from a valuation point of view, of course, there are certain gaps in crypto or in certain spaces which the valuations are potentially a bit higher in the US. But the reality as a European company, it's not always best to swim in an ocean. It's better to swim in a lake sometimes, you know? And so from that perspective, it's not an easy task to gravitate towards the US as a European company to list there. It's not the solution. I think what we need to do here in Europe is to make Europe more investor friendly for US investment or international investors, so that it's easier to navigate 27 markets in a more homogeneous way. Baltics, for example, is a great example. Make sure that the region is more attractive for international investors. In the long term, we've seen bubbles, but in the reality, the market continues to grow. And so we're in a very interesting stage now where a lot of companies will be a part of this shift that's taking place. And maybe valuations will settle, but I don't think they will implode. I think there will be potentially some correction, but it's not necessarily a dramatic shift. That's my view. And then I think Europe is on fire because we are investing more than ever, not only in defense, but in energy. We see a greater engagement across industries on a European level. So I think Europe has a lot of opportunity going ahead. So again, I would like to look at it more optimistically than talk about droughts and negativity and so on. It's just natural cycles. I think we're moving towards a more upward cycle. I think we have a great opportunity ahead of us, but we just need to make the most of it.
So just to continue on that thought, Maire, from a purely local perspective, let's say if things turn to the negative across the ocean, and to some extent that will impact Europe or Western Europe, do you think that would mean for local companies maybe postpone your IPO plans? Or do you think that we are remote enough and small enough so that we can operate according to our own conditions?
I think we are definitely very open to everything that we hear. It comes through so quickly. But I think I really liked Adam's presentation on Sweden, that we have historically and been really connected to Nordics, and getting to know that Sweden is doing so good is really promising to us. So I think most important is how Poland, Sweden, Nordics in general are doing, and then US, but obviously everything impacts.
Okay. So maybe now looking for these hopeful cases for next year. Egle, I wanted to come back to you and your experience as East Capital, as a capital allocator across the region here. What would you say are some common mistakes which new entrants to the capital markets keep making, and which they should avoid?
Well, a good structure of a deal is usually a big kind of quality stamp of the IPO. So I think we always look for a right allocation between local investors, between retail, between international investors. Well, hedge funds, of course, they are always a risk. And also the aftermarket, how can it be structured? For example, we talked about the private equity when they sell, let's say, their first stake, how much of that is left and how much of the sort of overhang is left after in the market. For a good growing, good quality company with good governance and so on, this might not be a problem, but a more risky company with maybe a more cyclical nature, this could create a bit sort of less positive aftermarket. So as investor, you have to pay attention to all of these things.
And this overhang, it's, if I recall, we discussed earlier, it's not necessarily the case for state-owned companies. So state-owned to public doesn't have this risk of overhang, but private to public would, right?
Yeah, you're right. I mean, state has a bit more flexibility. They can, preferably, they also want to stay with the quite big strategic stake and don't sell out everything, while private equity usually want to sell out all of it, right? So they're naturally higher overhang after private equity, whereas the state can be a bit smarter and have, we often want for a good quality company to actually state to sell more and create a bigger liquidity of the, but it's always maybe to do it with the big deal right away, so that sort of everything is happening at once.
May I add on the overhang?
Yeah, go on.
Because no, because when we are actually trying to gather business from the private equity, this is actually a big issue. That ideally, they want to sell all of their shareholding in one IPO done, like in Diagnostica. That's an ideal case.
Yeah.
But that's one case. Most of the case, actually, you have a certain IPO deal size that it can be absorbed by the market. That's number one. And then afterwards, they're left with, I don't know, another 30% that is have to actually be exited in the next few years. We have a lockup installed for that, but the overhang is normally there. And sometimes, no matter how good the company is, but the overhang is over, the lockup is over, then the share price is going to be hit because everybody knows that there is big amount of shares coming to the market again. So managing this is not an easy task. It's also, on the other side, I wanted to say about trading liquidity, because this is very important for fund managers like Egle. If I come to her and proposing different IPOs for her investments, she would definitely check how is going to be the trading liquidity. If it is illiquid, she probably gonna say, no thanks, yeah, so.
Okay.
But maybe just, I think it's interesting with the IPO cycle, because with every cycle, and we're in a new cycle now, just to be clear, because I think with every new IPO cycle, there's a new way to approach IPOs. You don't have an IPO playbook that works for each time. You know, we saw the SPACs, we saw direct listings, there's new dynamics. When I speak to private equity, and I speak a lot to private equity, you know, their view on the public markets and transitioning their assets, it's all individual for each asset, but fundamentally they're taking two approaches. One is they're not trying to maximize the value of the day one. They are envisioning that they will stay on as a longer owner in the public markets than they had traditionally have done. So I think from that perspective, this concept of overhang, again, it's issue by issue or case by case, but the reality is that the public markets is a necessary tool for private equity. We need well-functioning capital markets for private equity. They need liquidity. They will need to stay on as longer owners in the public markets. And I think that's going to be a new trend that we will see. We saw it in Verisure. They will hang on to Verisure for a longer period of time. We will see this in many of the new IPOs that come to market, in my view.
Okay, that's something for the deals to be structured in the future, to be borne in mind, as you said, new cycle, new approach. Adam, I wanted to continue with the discussion on the Swedish success story. Almost watching your presentation, thought it was a fairy tale, not in the sense that it was imaginary, but it was almost too good to be true. Now, you talk all the time with your Baltic colleagues here.
Yes.
Now, have you identified some quick first steps, quick fixes that could bring us closer to what you guys have achieved in Sweden? Or is it just do the same thing that you've been doing for the next 30 years and then you'll eventually get there?
No, there's no quick fix by any means. I do get a bit frustrated when I meet with some of the great Baltic companies that want to list somewhere else, and they talk about Amsterdam and London, and I've said, who's going to love you there? You know, in Sweden they would love you and they would hang on to you, and they would. So we're talking a lot to as colleagues here. If the companies want to do a list, that Stockholm should be a more natural venue than an anonymous place, Amsterdam or London. Especially in London now. But in terms of quick fix, there is no quick fix. I was very encouraged by the dialogue here with the ministers, pretty much aligned on the concept of one regulator or a homogeneous approach across the region. I think we talk very much more about regional alignment. Sweden is a great example, but we can do better. We need to make sure that we continue driving this. You know, for a long time, everybody was talking about the UK being the leading example. Look at it now. You know, so from that perspective, we always talk about the long term. There's no quick fix. At the end of the day, it's important to make sure that the dialogue is in place between government, institutions, entrepreneurs, you know, etc., and that you create this more predictable roadmap of how do you create a more visible alignment across the region. I think that is a key asset for this region, to really show as an example for Europe, how can you create a more regional approach? Because that's what Europe is trying to do, but you shouldn't wait for Europe. You should really drive that opportunity. And over time, you have great entrepreneurs, you have great companies, more and more investors are looking to this region. I think over time things will translate, but make sure that the pension system is in the capital markets, not outside the capital markets. Make sure that you're increasing the financial literacy and you're making the ease of access to the capital markets more tangible. The launch of investment savings accounts in Europe now, based on the success in Sweden, adopt it, embrace it. It's a great tool. It's not about necessarily making better investments. It's about making it easier for retail to manage investments. So there are many tools across the layer, but what was discussed here today about transitioning state-owned companies into the public markets, creating a more homogeneous market, creating more alignment, these are all great topics. There has to be a roadmap. It has to be visible. It has to be understood so capital and entrepreneurs can engage around it. I think this is the opportunities ahead of you, not behind you.
It's good to strike this optimistic tone. It gives us more inspiration. Maire, there's a question that came in from the audience that I thought maybe you're the best placed person to answer. What has been the biggest missed IPO opportunity for the Baltic markets in the last 5 to 10 years, and what should we learn from it?
That's a tough one.
It's a big question, yeah.
Yeah, I think in Estonia we've had some good privatization. Lithuania had Ignitis, so I think getting Latvia quicker on the privatization route will open up their retail and their institutions. So kind of it's how you teach people how to invest by doing it, by creating these new exciting opportunities. So I wouldn't say a single one, but if Latvia can come now to chip in with privatizations on public markets, I think it would help.
Can I maybe add one comment? Why talk about the missed one? Talk about the ones that are about to come, you know, or should be there. Engage with them. Vinted, NordVPN, Bolt, Sutedja. I mean, the list is long. Air Baltic. I mean, there are so many fantastic companies, important companies that need the public markets within different sectors. Make sure you not waiting for that opportunity, but as government, are you really talking to these companies to understand what it would mean for them to list? As institutional investors, are you talking to them so they understand that you want to invest in them? Do you really make sure that they understand the importance of a local listing? These are important initiatives. The opportunities that have happened or not happened, that's past. Focus on the future. Next 2 years will be great capital market years, in my view. The opportunities in front of us.
You mentioned Air Baltic, and there's a specific question here. It says, question to all the panelists, a yes or no answer. Do you think that Air Baltic will list in the next 3 years? So, Adam, do you want to go first?
Listen, I don't comment specific companies per se, but I would say that a company that is a long-term player in infrastructural, it's not all about companies that need to be growth companies, etc. At the end of the day, they play a fundamental role of our day-to-day, our infrastructure. They need capital. There needs to be engagement. They need to shift ownership. There's no reason why the public markets cannot be a good place for them over time. The time will come when they need to make the assessment, and they will make the assessment at the right time. But it's important that there's an engagement between investors, advisors, and then to support them in assessing when the time is right. But there are many good airline companies listed, and why shouldn't Air Baltic be a listed company?
Another question from the audience. Are we underusing technology, for example, fractional shares or app-based trading, to democratize access to Baltic equities? Who would like to take that? Maybe Egle or Maire?
I don't know. I think Nasdaq is pretty good in using technology already. Yeah. So I would say here is a bit different problem than technology in the Baltics, maybe. But
it is interesting. There's a global shift now with a lot of retail investing in crypto and so on. So what we are seeing is that there's a concern that a lot of the youth is going in the direction of new asset classes rather than investing in the public markets. We need to make sure that the public markets is an accessible place for youth in the future to invest in. We are looking into tokenization. We are looking into different infrastructures. We are a global technology player providing technology to 130 marketplaces. We have integrated the CSD infrastructure for 3 markets here. But at the end of the day, you need to make sure that financial literacy is high, the engagement in the public markets is high, and the ability to invest is easy and accessible and tax-wise incentivized. So then you can start talking about fractional shares, etc. But I think there's going to be evolution, and a lot of the legacy infrastructure fragmentation in the infrastructure needs to be fixed, and I think technology will be a part of that.
Can I add on I'm just saying because you mentioned tax here. We had the IPOs this year, 2 actually, a smaller one, less than 100 million. One is in Croatia, the other one is in Romania. In Romania, especially the retail part was very strong. The retail tranche was 42 times oversubscribed.
Yeah.
And when we did hydroelectric IPO, the demand from the retail was massive. I wanted to quote, the capital gain tax in Romania is 1 to 3%.
Yeah. It's an investment.
Yeah.
You should incentivize that.
So the last minute of our allocated time, I wanted to finish off with, Adam, again, a question to you. We heard several times mentioned today that transition from frontier market status to emerging market status. And I think Kaarel brought up this amazing statistic that the difference in capital invested is 200 times between those 2 statuses. So can you give us a very rough idea of how far are we as Baltics along the path from frontier to emerging?
That's a good question. I'm probably not the best person to answer it. Kaarel probably is. But from our perspective, there are many different dimensions. But I think at the end of the day, it can happen organically because we need larger companies in the market. So it's not a significant amount. The pipeline that we have talked about, both state-owned governments, government companies, but also some of these, flagship companies like Bolt, Vinted, NordVPN, the list is long. If they were to list, that would definitely minimize or increase the likelihood. So you need to engage with them. You need to, we need to engage with them. We need to make sure they understand the value of the local listing. It's not an obligation, but there is value for them to list locally, and that value will then translate into that shift and contributing to that shift. And I don't think the gap is huge, but my view is that we need to engage on many different fronts.
Okay. So plenty of tasks on our to-do list, so let's just grind on one day at a time. Thank you all panelists for sharing your thoughts. I hope the audience became at least a little bit more knowledgeable about the topic of equity capital markets. And Kaarel, with this I should hand over back to you. And thank you for the panelists.
Yes, thank you very much. Whenever somebody says that the Baltic region is too small for anything, then I think about Iceland. Iceland, with its less than 400,000 people, last year we had a good colleague of mine, the head of the Icelandic exchange here, talking about the market. This time we have from Íslandsbanki, the head of communications and investor relations, Bjarney, here to talk about their journey. Íslandsbanki did nothing more than the biggest IPO in Icelandic history. But one more thing why I'm always positively envious of Iceland is that they have really been starring the dual listings. If somebody is interested how and why they are lucrative, you can just look me up. If I'm not mistaken, there have been 7 or even 8 dual listings in US to Stockholm, one triple listing. So why I'm so strongly believing in the fact that it could also be the success story for us is that we can clearly see that all of these dual listings are complementary. So whether it is an Icelandic US, Icelandic Stockholm, the investor pools are different. We in the Baltic region are very retail dominated market. Our trading is 75 to 80% by retail. It is huge. So therefore all the companies who are thinking of also different markets will miss this opportunity of getting this retail if they are not accessing the local market. Sorry for the long introduction, but really I look up to you and very interested to hear about your success story. So the floor is yours.
What an introduction. I'll try to stand tall. So, good afternoon. It's a true honor to be here today to give insight into Íslandsbanki's history since listing in 2021. It's been interesting and insightful to listen to today's speakers and learn about the Baltic capital markets and the sentiment to list the state-owned companies. I'm really realizing why I'm here today and happy to share some insight. And I hope I leave you with some useful points today. I'm very aware of the fact that I'm the one standing in the way of your lunch break. So I'll get moving and tell you what has brought me here to Riga today from Iceland. And it's the story of Íslandsbanki since listing. But let's start with a bit of background on the bank and how things are up in the North Atlantic. So Íslandsbanki is one of the 3 largest commercial banks in Iceland, and 2 of them are listed. The other one listed is Arion, and then Landsbankinn is fully owned by the state. There are then other smaller banks, fintechs, and boutique operations, but Íslandsbanki has throughout around 1/3 market share in the area it operates. And we operate across the country in 12 branches,
And there's a strong roots in being privately owned as opposed to being owned by the state. So I'll get to that in a second. So we have a Moody's rating of A3 and BBB+ by S&P Global, and both are on a stable and a positive outlook, each of them. We have a population, as mentioned, of 390,000, and it's one of this, and our currency, the ever so mighty Icelandic krona, is one of the smallest free-floating currencies in the world. So here you'll see the main stepping stones towards a full divestment of the state's share in the bank, which was completed in a fully marketed offering last May. So we have a history. Everyone loves to stretch the history of their companies way, way back, and we can stretch our history back to 1875, when one of Íslandsbanki's predecessors was founded. We've gone through evolving through mergers, acquisitions, and obviously the global financial crisis hit Iceland hard. And I've already had some discussions with several of you who remember the Icelandic banks in 2008 and the years leading up to that. So following the 2008 financial crisis, a new era commenced. So the domestic operations were transferred to new entities with a clean balance sheet and no legacy exposures. And in 2016, the banks became fully owned by the Icelandic state. So this was part of concluding the winding up of the banks, the old banks, and was considered a stability contribution from the banks to the state, and the banks were then fully owned by the Icelandic state. Íslandsbanki was sold in 3 steps. First, through an IPO in 21, when a 35% stake was sold and the shares listed on Nasdaq Iceland under the ticker ISB for interested parties. And in 2022, there was an accelerated book building where a 22.5 stake was sold, which was highly controversial and led to the approach adopted in 2025, which ultimately became a great success story. And I'm pleased to be here to tell you all about it. So we have a market cap of around 230 billion ISK, which roughly translates to 1.6 billion euros, to give you an indication of our size. So it was known from the outset of the Icelandic state getting control over the banks that it had no intention of owning them forever. So the government disclosed its intentions to sell its stake completely when favorable and desirable conditions were met. And with that statement, the market was waiting for the IPO. And the sell-down was looming, and preparations begun. And the stake was managed by Icelandic State Financial Investment, ISFI, and it was a governmental body with an independent board, and the goal was to ensure distance from the politics. I'll tell you in a bit how that went. So the first step, the IPO in 2021. As already mentioned, it was the largest IPO in the history of Iceland at the time, when a 35% stake was sold. Book building took 8 days, and it was multiply oversubscribed with substantial interest both from retail and institutional investors. There was a guarantee to retail investors, as noted on the slide, of a minimum allocation of up to 1 million ISK. And the offering attracted cornerstone investors, both international in capital world and domestic in 2 local pension funds, who committed to participating throughout the offerings. And ever since the IPO, capital has been the largest foreign investors and now holds roughly 5% stake in the bank. And this was the first involvement of cornerstone investors in an Icelandic IPO without an offshore listing. So there were many firsts, and it was a huge success, and having 24,000 shareholders was obviously a huge change for a bank that had been owned by the government. And following the IPO, retail investors held around 9% of the shareholding, and foreigners were around 11%. IPO was well received and feedback was positive. Quite a different story from the ABB in 2022. And that transaction, the 22 transaction, shaped all future steps taken by the government in disposing of its remaining stake. So let's move on to March 22, when an APB was carried out of a 22.5% of the Icelandic state's stake. It was based on a recommendation from the ISFI, and it was carried out after market closed and results announced before opening of markets the next day. So during that time, a lot of things happened. And the second point there, the fact that there was no retail participation and it was only targeted towards qualified both domestic and international investors, resulted in the huge controversy that transpired following the offering. At first, it was considered a huge success. The stake was sold, the government got its price for the shares, but then soon the public started voicing disgruntlement. It was the first time a publicly owned property was sold through an ABB. It was not a well-known format in Iceland, and people really didn't know how this was supposed to be executed, and the general public felt left out. It wasn't transparent enough, and people were unsure of who could participate. So the general public was displeased with not being able to participate, and they felt at a disadvantage to the professional investors. So lack of communication and structure offering resulted in a significant erosion of trust. Very controversial, led to the resignation of the Minister of Finance. In terms of Íslandsbanki, the CEO ended up stepping down, and some senior management as well, and the ISFI was dismantled. So the stake from that moment on was held by the Ministry of Finance. So it was clear from that point on that every future step taken towards a full privatization would need to draw lessons from the 2022 transaction. And it was also clear that all steps and even intentions would be heavily scrutinized, both by the media as well as the general public. So, in early 2024, a bill was presented, and it was passed as law in June. And the principles of the legislation, it was to have it dealt with in an objective manner, being efficient, equitable, and the key word to the transaction was transparent. Everything had to be super transparent. And the retail element was obviously a huge element as well. And the discussions went on, and people started remembering the 2022 transaction, and the people organizing were very much aware of it and made sure not to fall into the pits of 2022. So, it was not meant for 2024. The coalition government exploded. The new government wanted to put its touch on the bill, so they made amendments, and on 13th of May, the FMO was announced. And let me tell you, as you can see, it did not go as we had expected. So, from the outset, the plan was to sell at least 20% of the remaining stake, and the state at that time held 42.5%. Immediately off the gates, we sensed that something was happening. The offering was split into 3 tranches. There was an A tranche for retail domestic investors. They had a maximum allocation of 20 million. And you remember during the IPO, the maximum amount was 1 million ISK. And then the B tranche, it was for retail and legal entities with a minimum offering of 2 million ISK. And then the C tranche supposed to attract large orders with a minimum offering size of 300 million ISK. And an important part, the law stipulated that retail allocations should have precedent over any other allocation, which meant you needed to complete allocations towards Book A before even going on to other tranches. And we had 2 days of book building, and it was clear that retail demand was strong. And by strong, typically, strong retail demand in an IPO or a secondary public offering would be around 10 to 15 billion ISK. We reached 90 billion, and it was sold to the general public in Iceland. So this obviously did not go according to anyone's expectations. There was significant international, institutional, and substantial local demand. Shares were allocated to 31,000 retail investors, and then 56 allocations to other types of investors. They decided to increase the volume, and full sell-down was completed with that transaction. The demand from the retail side was unprecedented, and all shares were sold. So we don't fully know what happened, but I think it's a likely mixture of many things. And following this transaction, around 30% remains held by retail investors. So just briefly, I'm being asked to wrap up here, so let's make it interesting. So this is information about retail participation in Iceland and the number of individuals owning listed shares. So bear with me, they've somehow shrank. So it's the last pillar is 30th of June following the secondary public offering, and then it's 24/3 and goes back. So you see that we had significant activity in the IPO market in the years 20, 21, and 22, dropped down a bit in 23 and 24, and this was the only public offering in 25. But you can also see that retail participation is on the rise, and many individuals purchased their first ever share when they decided to participate in the offering. So obviously we did a lot of investor work, and I want to believe it paid off. But to close, what were our key elements to success? We remained vigilant in our messaging to the investor community, and this goes for before I even joined the bank and before the IPO. So regular and frequent communication with the investor community is very important. It may take 2, 3, or even more visits, but stay on the case and have a well-rounded equity story and tell it yourself. So when I joined the bank, a colleague of mine said to me, Bjarney, we need to tell our equity story, because if we're not telling it, somebody else is, and he or she might not be telling it the way we want it to be told. So again, stay on the case. Be prepared. Both prepare the investor community and also internally, because during these transactions, you need to prepare all sorts of documents, and as you all very well know, and then expect the unexpected. Nobody expected 90 billion ISK to be sold to retail investors in a 2-day transactions. So to allow you to get to your lunch break, thank you for having me. And do you have any questions?
We don't, but we can. You're sticking around for the lunch break at least.
Yeah, I'm sticking around for lunch break, but then I have a plane to catch to Copenhagen. So happy to
make use of it that you are here and look you up. So very inspiring. Thank you very much.
Pleasure.